From the Huffington Post, the Federal Reserve Bank of New York told bailed-out insurance giant AIG to withhold details from the public about overpayments that gave billions of extra tax dollars to major Wall Street firms, most notably Goldman Sachs. The head of the New York Fed at the time was current Treasury Secretary Timothy Geithner. A series of emails between the company and Geithner's arm of the Fed were obtained by Representative Darrell Issa and first disclosed by Bloomberg News. The correspondence reveals that the New York Fed told AIG to delete references to sweetheart deals the firm bestowed on major banks from its draft regulatory filings. AIG paid the banks 100 cents on the dollar for worthless insurance the banks had bought from AIG known as credit default swaps. Issa said of the controversy, quote, "It appears that the New York Fed deliberately pressured AIG to restrict and to delay the disclosure of important information. Taxpayers deserve full and complete disclosure under our nation's security laws, not the withholding of politically inconvenient information. The lack of transparency and accountability is disturbing enough, but the outstanding question that remains is why the New York Fed didn't fight for a better deal for the American taxpayer. Clearly, the New York Fed wanted to suppress details and limit disclosure of the counterparty deal from the American people. The only question is why. Taxpayers have committed about $182 billion to AIG. The underregulated firm developed and sold complicated derivatives products without having enough money in place if those bets went bad, which they eventually did. The firm nearly single-handedly wrecked the entire financial system.